Okay, tonight, in terms of what we're going to be doing, is I was asked to go over the note that I made today in the Day Traders Lounge on Telegram in terms of Docs Trading Nugget for the week. Someone asked that I go through it and basically explain the rhyme and reason behind how to go about following this methodology. Um, all of you here, this methodology is actually nothing new to you. It was just simply me breaking down the swing trading method in its simplest format, so as to bring everybody up to speed. It is this post right here. Uh, in terms of Docs Trading Nuggets for the week, the first thing I said is, if you're working 9 to 5, use the top-down analysis to review your charts. Focus on the weekly and the daily charts and use the 4-hour chart to enter your trade. Set alerts on TradingView for your buy or sell entry. Choose a coin or asset that is trending in one direction and trade in that direction. Project 4 to 7 days into the week. Only use 2% to 10% of your portfolio on any one trade. Place your stop loss behind a major key level on the 4-hour chart and take profit on key levels on the daily chart. From that point forward, relax and let the trade play out. What I've found with new traders in particular, you can tell them these things, but in terms of them implementing the patience that is necessary to literally sit down on a trade for 4 to 5 to 7 days to get the type of returns they are looking for, a lot of persons don't have the psychology down pat in terms of being able to be grounded while you're trading and be able to be relaxed and calm in the midst of your trading. And this is something that if you can learn the art of patience and allowing your trade to play out, you will be able to consistently take anywhere from 10 to 20% out of the market on a weekly basis. Now, you may say 10 to 20% may not be considered a good amount of money to be had, but when you look at it over the course of a month period, over a course of a 4-week period, that 10 to 20%, if you only made 10% a week, that would be 40% at the end of the month. If you made 20% a week, that would be 80% at the end of the month. And the thing that most new traders need to understand in terms of understanding this swing trade strategy, which is primarily designed for the individual who is working a 9 to 5 job. This particular strategy is very low maintenance, and literally you can do your chart work in under 1 hour's worth of time. And you can do that on a Sunday evening or even a Monday morning. And you can enter your trade and you can relax for the rest of the week, knowing that you're making money in that trade. And at the end of that week to a week and a half period, you would have garnered a 1 to 3 risk reward ratio in terms of your return. Now, let us get into the meat of the matter. As I said earlier, I would share the trade for the week that some persons, if they're interested, they can take a look at this trade. But I wanted to just simply show the rhyme and reason behind this particular trade and why you should consider this setup. Now, first and foremost, a lot of persons are getting caught up in all of the social media hype, all of the YouTube hype in terms of what they feel the market should be doing at this particular time. But as traders, you simply want to simply trade what is present in front of you. Now, one of the things that I myself have started doing, especially with the uptick in political season rhetoric and in terms of the instability from a global political standpoint, in terms of a lot of saber rattling, in terms of people speaking to war. What that has done for me mentally is it has put me on the offensive. And my way of being on the offensive that you may want to consider at this particular juncture is to primarily focus on looking for short sells. Focus on looking for short sells, because if something contrary happens within the market, say within the next month to 2 month period, you won't find yourself on the adverse side of a trade. And another thing that you should be cognizant of in terms of the overall market structure that you are going to encounter, you when markets are facing this type of volatility, you should know that declines or major drops in the market can happen at any time. A lot of persons, they wait until the market is already in free fall when they could have been positioning themselves trading wise to position themselves to be prepared or braced for any market outcome. So at this particular point, students, I would advise you to focus more on short sell positions, because what you'll notice as well is you will find that there are more opportunities for short sells at this particular time in the market, especially within the cryptocurrency market, based on the fact that there's a lot of FUD in the market. So now let's get to it. Like I said, based on that sentiment, what I've been doing is I've been looking at assets that are at the beginning of their free fall, at the beginning of their free fall. When I say at the beginning of their free fall, at the beginning of their downward descent after a good run up. And that is one of the reasons why I came to look at the ton coin. For those of you who may not know the ton coin is tied to Telegram. This is a coin that was created by the Telegram platform creators. And what you would have noticed is ton coin experienced a great run up, whereby there was a breakout at the $2 mark, and ton coin went from $2 in February of this year, and it went all the way up to $8.28 at its market peak. At present, it is now at $6.93, and it is now on its descent. From a general analysis, here it is. I always preach to you the top-down analysis method. So here it is in this particular analysis. In terms of the top-down analysis, I use the weekly chart to determine the overall trend that I should be looking at. And I use the daily chart for a more microscopic analysis of price action, as well as to give myself the key levels that I would need in terms of entry and exits. And the next time frame that I use is the 4-hour time frame. In terms of why I use the 4-hour time frame, I use the 4-hour time frame to enter my trade. Now, based on this strategy, this is a swing trading strategy. This is a swing trading strategy. So that alone should give you some understanding that this is not a trade that you're going to be in just for a few minutes or a few hours. This is a trade that I'm going to be in for a few days well. Now, in terms of coming to some understanding of where this trade may potentially go, this would be the stage where you would use Fibonacci on the weekly higher time frame to ascertain the possible areas of where price is expected to go. Now, in terms of the Fibonacci tool that is available to you on TradingView, you must be cognizant that in order to use the tool, you want to go from the last high to when the actual breakout started. In terms of the areas of Fibonacci that you want to be cognizant of, you have the 0.7 zone, which price is presently at, and you have the 0.6 and the 0.5. This zone here is what is considered the golden zone. And as with my Fibonacci settings, I have the top portion with the gold line and the bottom portion with the gold line. And it is one's expectation in terms of where price will go to in terms of retracements. It will usually go to the 0.6 or the 0.5 level. And in that regard, what I would normally do is I would place a horizontal ray at those areas so as to remind myself of those areas. Then I would remove the Fibonacci chart, and that would give me a good idea of where I can expect this coin to retrace to before it goes up or continue to go down. Now, in terms of what my next analysis would be after analyzing those areas on the Fibonacci, I would see where those areas line up on the daily chart. And as we see here, the Fibonacci giving me the 0.6 zone brings us to $5.97. And that lines us up with this demand zone here. And in terms of the 0.5, that lines us up with the $5.13, which brings us just below the order block and right above the discounted level. So here it is. What it means in essence, it means that we can establish potential take profit zones based on this scenario. As we said, this demand zone here would be the first take profit level. Now, as a trader, you want to, in essence, you want to position your trade in a way that you are not, how should I say it? Don't be greedy is the best way to put it. You take the obvious first zone or key level that is noted to you on the daily. And the reason why you would want to use these zones on the daily is these zones are the areas that price is being drawn to. Now, here it is just with this movement here from where price is now down to this demand zone. That is a risk reward ratio of 1 to 3.3 in terms of what you would be looking to make. Now, in terms of the percentage wise, this is a 13% move. This is a 13% move. I don't know about you, but 13% just for this little direction here is worthwhile. Now, when we examine the other indicators in terms of giving us confirmation as to the direction that is going to take place, we see that on the RSI is positioned in a downward flow position, and there's still a lot of downward capacity to be had on the RSI. So that gives us confirmation that yes, price is still trending downward on the daily. When we look at the market cipher indicator, we realize that the mountain has not gotten to its peak as yet. The upside down mountain has not gotten to its peak as yet, which would be noted by a green dot. And that would be our indicator to get out of the trade. Now, as it presently stands, let me close this and show you further rhyme and reason for this trade. Now, the rule of thumb, ladies and gentlemen, is the higher time frame. In this instance, the weekly time frame should serve as your primary driver in terms of understanding the trend and direction. Now, in the midst of understanding trend and direction, you want to open up your chart to where you can clearly see the premium zone and the discount zone. And once you can clearly see those areas, you can see where price is coming from. And the method of swing trading that I told you to implement is if price is coming from the top quarter of the premium zone, you should be looking for a sell. If it is coming from the bottom quarter of the discounted zone, you should be looking for a buy. So with that criteria in mind, we see that price is coming from the upper quarter of the premium zone, which is telling us that we should be looking for a sell. And even though a sell indicator has not come up as yet, we already see that price has broken below the recession plot line, which is the white line here, and an entire candle has formed below that line, which is a strong indicator of further downward pressure. And when we look at the weekly charts RSI, we notice that the RSI has just come from a position of being overbought, as is noted by this green smoky area here on top of the RSI mountain. And from that position of being overbought, we see that price from that point forward has started now to trend to the downside after hitting its premium level. Now, when we look at the market cipher of the weekly, we also see that we have had successive 2 red dots, and we are now operating on the second red dot, and price of the mountainside has already started to come down. So we know that we now have 3 confirmations or 3 confluences of a downward direction. The first confluence is the formation of a whole candle below the recession plot line. That's the first confluence. The second confluence is on the RSI. We have moved from an overbought perspective in terms of the green shaded area, and prices now began breaking to the downside of the RSI. This is the second confluence or confirmation. The third confluence or confirmation is we have received a red dot on the market cipher, and the mountain has started to move to the downside. So with those three confirmations, that is strong confirmation from the weekly chart that we can expect more downward buying pressure. And because we know based on this particular setup, we can assume that even though this particular candle has an additional 6 days and 1 hour left, we can confidently rest in the knowledge that based on the present position and confluence of those three confluences, that this downward pressure from the weekly chart will continue. So, and we know that we have at least 6 days in front of us with downward pressure. So with that in mind, we've now ascertained the direction of the trade, and we've ascertained that based on where the price is coming from, the premium level, that we will be getting a strong push to the downside. Now, the weekly chart, because that is the larger time frame and we're using the top-down analysis, the weekly chart is basically going to serve as your master time frame, especially if you want to get the maximum amount of money or profit out of a trade. The rhyme and reason is simply this. Persons who use the lower time frames based on the market structure and market phase of the lower time frames, you will be more prone to exit a trade prematurely based on what the lower time frame is telling you. But you should be always mindful and you should be always cognizant that the lower time frame price action is action that is happening within the higher time frames candle. So here it is on this weekly chart. We are seeing for the last 2 weeks, there have been 2 red candles indicating downward selling pressure. So this should tell us that even if we look at the lower time frames of, say, the daily or the 4-hour, we should expect that within these 2 downward candles, the lower time frame will have a stair-stepping pattern, and within that stair-stepping pattern, there will be retracements, and these retracements will serve as moments of when you will see not just red but green candles. And let us go to the daily chart to show exactly what I mean when I say that. Always try and line up your charts in terms of notice. Notice on my weekly chart, which is the first chart, I can see clearly my premium, equilibrium, and discount levels. On my daily chart, I can also see my premium, equilibrium, and discount levels. Same thing with my 4-hour chart. The reason for this is so that when you are entering into your trade, you are cognizant of the market structure that is taking place on the lower time frames, as well as what the larger time frame is telling you. In terms of trading, ladies and gentlemen, the reason why I normally advocate for swing trading is not only just because you will make a larger profit margin. I advocate for swing trading because in terms of ensuring that you have a higher strike ratio, a higher profit margin, a higher percentage of profitable trades. The swing trading using the higher time frames as your direction or your steering wheel will serve you best. I know a lot of you would come into day trading wanting to make money quickly, but day trading should be treated as a business in terms of you can set goals in terms of the percentages you would like to accomplish with any given week, within any given month, and you can readjust your business strategy based on you either hitting your goals or not hitting your goals. The chances of you hitting your trading goals are higher based on you trading using the top-down analysis. Now, here it is. We are using the weekly time frame for crypto day trading. But for those of you who are trading the stock market or the forex foreign exchange market, it is advisable that you incorporate even the higher time frame of the monthly chart. Now, to give you a clearer understanding of why you want to use the higher time frame charts, the higher time frame charts is what the institutional investors use to determine their key levels. And so if you use their key levels, the chances of you having better trades are increased 100-fold. And this is one of the reasons. Whereas the average retail trader would prefer to trade in the lower time frames in terms of the 5-minute, 15-minute, and the 1 hour, the average institutional investor, when they look at in terms of what they consider a low time frame, the average institution investor considers a 2-week to 1-month period the smallest trading time frame that they would consider getting into. So if you know that they are looking at the market at a minimum of weekly time frame, then you as a retail trader should use the weekly time frame as your primary means of data and information. And what you will find as a trader when you start to use the weekly time frame in terms of your overall data and direction of understanding market movements, you will find that the weekly time frame will give you heavy data in terms of proper direction and trajectory. And if you implement the rule of only entering trades on the upper quarter or the lower quarter to determine your buy or sell, this in itself will ensure that you have a higher probability of getting a successful trade. Now, the number one issue that I've encountered with new traders who are trying to, who are getting into trading is they don't understand the true value of money in terms of the passage of time. Here it is. You tell someone, the average person, you can make between 10 to 20% a week. And once you start compounding that, you can really make a good living out of compounding that money. You tell them that, but in terms of them understanding that, they will most instances have difficulties understanding that because they did not learn the language of money. And that is all really trading is. if you learn the language of money in terms of understanding how institutional investors operate and how they think, you will be able to move and operate as they move and operate. You should be cognizant that they are not of the mindset of retail traders who want to make 1,000% a year or 2,000% a year. They are usually of the mindset that if they can make anywhere between 5 to 20% a year, that has been an extraordinary year for them. Now, the reason for this is very simple. It is because these traders have larger amounts of money that they are putting into the market. And because they have larger amounts of money they're putting into the market, they can operate on gaining smaller percentages and still comfortably operate their portfolios in a very profitable fashion. Now, here it is. Let me bring up the Telegram notes again. The first thing we looked at is if you are working 9 to 5, use the top-down analysis to review your charts. Now, in quick review, the top-down analysis is just simply looking from the higher time frame and going down to the smaller time frame. And for swing trading, the time frames that you're going to be using will be the weekly, the daily, and the 4-hour chart. Now, in terms of the next point, focus on the weekly, the daily charts, and use the 4-hour chart to enter your trade. We've said that already. Sorry for the repetition, but once you can get this into your brain, you literally can do this or trade like this on autopilot. The next thing that I would advise you to do is to set your alerts for your buy and sell entry on TradingView. So here it is. You've already ascertained that the direction that the trade is going in is for a sell position. You have already had your 3 confluences to confirm that. So now you are going to the daily time frame to assess market structure. And when I say market structure, basically you want to go to the daily time frame to confirm that what you are seeing on the higher time frame of the weekly is actually playing out in favor of your original hypothesis. And when you come to the lower time frame and you line your charts up, and that is something that I also advise strongly for you to do, line your charts up so that you can see the same swings, the ebbs, and the swings on the daily that you would see on the weekly, so that you can line your chart up properly. Once you've lined your chart up, you can now open your chart up to where you can see the smaller price action. And what we see take place in this area here on the weekly, we saw that price went up and hit the premium level and was rejected strongly by this red candle here. Now, what we see, this same strong candle up and the red candle down on the daily, that is this push up here over a period of 1, 2, 3, 4, 5 days, and the strong push down rejection. But what we also see on the weekly is a retesting of the premium level. And this retesting we see done on the daily right here. Okay, so here it is, ladies and gentlemen. So here it is, ladies and gentlemen. When we look at the daily chart and we do the comparison of what is happening on the daily chart in comparison to what the weekly chart is telling us, we see that this movement on the weekly to hit the premium level and the retesting of that has formed what we know is called a double top, a double top. Now, a double top or an M pattern, you see the double top, the two times it hit the premium level, it hit that supply zone and was rejected. A double top is a strong indicator of a reversal. So here it is. If you would have had any misgivings or thoughts of whether price is going to continue to the upside, the double top would have confirmed to you that there has to be a reversal in terms of in terms of price moving forward, where it was moving. Now, in terms of what we see take place on the lower time frame of the daily, after the double top and failure, we see that there is a break of structure in terms of what we had going on first. If we look at the weekly, we had higher high, higher low, higher high, higher low, higher high, higher low. And now what we see taking place, before the reversal, it was higher high, higher low, higher high. This is on the daily in the middle, by the way. And we see a higher low, not by much. But then we see a break of structure and we have a lower high, and now we have a lower low, which is telling us that there has been a market structure break and there has been a pivot. Once we see that taking place as a trader, we now can position ourselves for a potential short, and that short is based on the fact of price breaking below the plot line and retesting that zone. And what we see happen is, even though price broke the zone, it tried to reestablish upward pressure and it did not hold. And the overall downward pressure that we noted from the weekly took the prevailing trend. And that was the reason why we were looking for a sell. Now, most of you would want to quickly enter a sell based on just receiving an indicator. But what you must understand is when there is a market structure break, you should allow for a retest. And what we have here is price breaks below the recession plot line, and then there is a retest. It is at the retest that you may now consider your entry. When you are now looking to consider your entry, this is when you would move now to the lower time frame of the 4-hour. And what do you notice at the retest zone? That brings us right here on the 4-hour chart, where we see a strong sell as well as a break below the plot line. It is at this juncture here you can enter your sell and you can put in for the next. You can use the next key level on the daily as your take profit. And what we see here before us as we open up the daily chart, what we see here on the daily chart, next key level is this demand zone here. And what we note is that just from where price is now to this demand zone is a risk reward ratio of 1 to 3. And this is the type of trade you want to be looking for. You want to ensure that you want to look for trades that are going to give you a risk reward of 1 to 3 as a swing trader. And this will ensure that every week you will be able to comfortably take anywhere from 10 to 20% out of the market. Now, here it is. This is a 13% move in terms of if this trade plays out accordingly, this would be 13%. This would be our first take profit zone. Second take profit zone would be the order block just below, as noted by the green area. If price goes to that zone, we would be looking at a 20% move. In terms of the probability of this happening, when we examine the structure of what is happening on the higher time frame of the weekly, you would note that the 20% mark brings us to basically the $5.60 range, which is right here on the weekly. Let me put where is that? This would be the second take profit potential zone if price was to go into the golden zone on the weekly, which we expected to do accordingly. Now, here it is. One of the things that will make your trade experience less monotonous or less time consuming, because as traders, you can find yourself becoming antsy in your trade if you are not cognizant of how much time needs to pass in relation to your trade. Here it is. If we open up the weekly chart, and we use date and price range, it will take sorry, forecast. Here we are. On average, if you were to ride this particular trade on the, let me go on the daily to make life easier for myself. Seeing that we're already doing the lag work. We're looking at approximately 17 days for that 20% on average. Now, here it is. If you are looking at the first take profit zone of 13%, that might take place in approximately 12 days or 2 weeks thereabouts, 10 to 12 days, give or take. So here it is. This is what the issue is for most persons. We now mentally have to put ourselves in a frame of mind that this trade, just for the 13%, can take approximately a week and 3 days. If we wanted to wait out the entire time frame in terms of the second take profit, you'll be looking at approximately 13 days thereabouts. But this is where you have to determine how long you want to be in a trade, and this is where you have to determine the amount of profit you want to take. And as you can see, this method of trading allows you to relax. I don't want you to think. Let me pull up. I think I have this trade on right now. This is the trade that I entered. This. Let me refresh. The reason why I shared this trade with you, because this is actually my trade for the week. I'm presently already in the green, as you can see. It's slow in moving, but I'm already $12 in profit, and I will be at a 20%. I'm gonna get out at 20% profit, and basically, this is the daily chart that I'm using as my main focus, and my main running indicator that I'm going to be using is the RSI. As you can see, the RSI has a whole lot of room down to go. So I expect to make my profit there. So that is that particular trade. Let me exit this. We had a special request. Now, before I go into the special request tonight's class, let me make sure I go through all of my notes. Now, here is the next point that we touched was choose a coin or a stock or an asset that is trending in one direction and trade in that direction. So we took a look and we noticed that Toncoin had hit its premium and it formed a double top on the daily, which is telling us a reversal is in play. Get ready to enter your trade. And that is what we did. We entered that trade. In terms of the next point, project 4 to 7 days into the week. Based on my projections, I expect that comfortably for the next 4 to 7 days, I'm going to be in the profit. I'm going to be taking profit. And once I get to my take profit level 1, I will shave off 50% off of the trade, and I will let the remainder go for the other 10% or the other 7% of that overall 20% that I'm looking to take out of the market. Now, I also said place your stop loss behind a major key level on the 4-hour chart. As we look at the 4-hour chart, in terms of the key levels, let me shrink this a little. As we notice in terms of the key levels where price is right now, if you were to open up the 4-hour chart and look at where the key levels are, the ideal place to place your stop loss would be behind this supply zone, based on the fact that it has already hit that supply zone and has been rejected from that supply zone. And because the overall trend is a downward trend that is coming from the weekly and the daily charts, we can expect that the downward pressure will continue. There may be some consolidation on the lower time frame of the 4-hour, but in terms of the overall trajectory, you're going to see the push to the downside is going to be amplified. What you just heard and saw just now was my alert on, excuse me, my alert on TradingView being activated, which was a red dot, sell dot on the market cipher, confirming further downward pressure on the chart that I'm using. So that in itself is, for me, is further confirmation that I'm in the right direction for the trade. So in essence, your stop loss, as you can see, my stop loss is at a 3.98% position. In essence, 4% behind my entry position on the daily uh, chart. And what we have taking place is a situation where uh, when you place your stop loss on the 4 hour time frame, what it does is it allows you breathing room in terms of price action. Because keep in mind, even though you're going to be in these trades for a week and a half, you still should check these trades, say once in the morning, once in the evening, to ensure that what is happening with you is what you want to happen with your trade is continuing to happen. And as you can see, price is going deeper into the profit for me in this trade. So literally, I can sleep comfortably through the night. I don't have to worry about this trade turning against me because I'm using the higher time frames of the daily to determine what is going on in terms of my ability to relax and rest. I know that I have another 23 hours just on this candle here, so I can relax. Here it is. What this allows you to do is it allows you to do other things in your life. And for those of you who may be in a 9 to 5 job, this type of trading will ensure that one, you will be profitable. Two, you don't have to sit in front of your monitors day in, day out, day in, day out. You just enter your trade on Sunday or Monday morning, just like I did. I entered this trade this morning at about 9:30 thereabouts, and this trade was running all day. In the initial phase, I jumped into the green, and then there was a little slight retracement. I was 2% in the red, and then the trade stabilized, and the lower time frame fell in line with the higher time frames. And right now, as you can see, all of my time frames are all in the red position for a perfect sell. So that is that aspect. The next point, only use 2 to 10% of your portfolio on any one trade. Ladies and gentlemen, this is key. This is key. I know a lot of persons out there, they teach survival trading, but personally, I teach what I consider a more aggressive outlook in terms of you taking your trade more aggressively in terms of when you use that 2 to 10% of your portfolio every week, keep in mind that is growing every week. That is growing. Now, a lot of persons, they think that the small growth in the beginning is something to be scorned at. But if you can pull 80% out of the market in a month, if you can pull 80% out of the market in a month, that is a good month. So here it is. If you started off with $1,000 in the market and you made 80% for the month, you just made $800 for the month. And here it is. That isn't even trading on leverage. That's flat trading. You see, and this is how you must view trading in terms of how to approach it, in terms of the methodology that you would implement. This is very important. So we examine where to place your stop loss behind a major key level on the 4 hour chart. I showed you why. It gives you breathing room. If you want to, you can place your stop loss on a key level on the daily chart, considering if that is a safe trade as well. In fact, if you were to place your stop loss behind a key level on the daily chart, you would actually be in a safer zone. But you have to assess and determine what your appetite for risk is. This here, I cannot stress this enough. Risk management, risk management, risk management. Many students, because they don't practice these simple things. You may hear me repeating a lot of things a lot of times, but it is to get these things into your subconscious, these rules, to the point that where these rules are not just operating in your subconscious, but operating in your conscious trading as well, to the point where you begin to see these things and you operate in trading these things in a way that trading is not work, but trading is fun. If you find or you feel the energy that trading is work or trading is a burden, then it means that you have a wrong perspective of what you're doing, and it means that you do not have the right strategy or method of trading in terms of entering and exiting your trades in place. Once you have these things in place, you know where you're going to enter, you know where you're going to exit, you know where your stop loss is going to be. You will take a more relaxed approach to trading. Here it is. Trading is in the initial phase is meant to be an additional avenue of income. When you first start trading, trading is not meant to be your primary source of income. And as you grow your trading skill, as you grow your ability to consistently make money by consistently doing your chart work, by consistently following the rules, you will find that your trading account will consistently grow bigger and bigger and bigger. And the trading account that may have started off as $1,000 within a year to 2 years, that same trading account could be holding 500,000 to over $1 million. But you have to take a comfortable, consistent approach. This same swing trading strategy right here that I am explaining to you is literally a $1 million trading strategy. You just simply take your time and implement your trading strategy. Do not rush your charting analysis. Some people can do their charting in 5 to 10 minutes and they can quickly find the stock or the crypto that they're going to trade. Others may need a half hour to an hour. But when it comes to swing trading, you really only would take maybe an hour to go through what is available in the markets and to take advantage of those opportunities. So this brings us to the end of that portion of the class. I just wanted to go through Doc's nugget for the week, and I wanted to share my trade for the week with you, so that those of you that may be interested in analyzing the trade and seeing if this would be a trade that you may consider entering for yourselves, it is an option. But as I always say, do your own research, do your own charting work. Do not just take my word for it. Analyze the data for yourself. Trust but verify. Again, trust but verify. Okay, the special requests for tonight, I was asked to do an analysis of XRP. Let me pull XRP up. And I know a lot of conversation has been taking place with XRP in terms of what is happening with XRP. There have been some spurts And like we do with all things, we start with the top-down analysis, starting with the weekly chart. Makes for interesting fodder. And what I do in most instances, like I said, I like to try and get a big picture of what is happening with any given asset. And in this instance, you can see how far back I'm looking. I'm looking all the way back to April 2021, because what we have is we have three major liquidity zones that have been formed by XRP. And what has taken place, there has been a breakout from a noted level. We have a breakout from an order block that was formed way back in May of 2023, and price went away, retested it, was rejected, went away, came back, retested, and was rejected, came back, retested for another time, and was rejected. In terms of what we see happening, what we see happening is the order block that was formed here in December, based on this red candle here. That order block was tested and dealt with. And what we see happening now is price is testing that order block again. When we look at the RSI, we see that the RSI is pushing to the upside. Now, there is some hindrance at that order block there, but we also note that there is a push up with market cipher, and the upper portion of the mountain is looking likely to take place. However, we want more data, So now here it is in terms of the key levels that I would be looking at if I was looking to trade XRP at this particular time. We note that this supply zone is there, but that has already been tested. And we note that a order block has been formed that has pushed price to the upside. Now, when we go to the lower time frame, because what we see here is still a little cloudy. Technically, XRP is in consolidation. In order for there to be the upward trajectory, it has to clear this order block here. And what we see is price is trying to push through it, and the potential for clearing that order block is very high. We now go to the lower time frame to see what's really happening with that order block. And that order block in terms of the daily, what we see happening here. What we see happening here is that order block is being respected on the daily, and we are going to have a rejection from that order block on the daily. So before price pushes up to go outside of that order block, you're going to see price move to the downside, most likely come back to this same area here, but this is where you would use your Fibonacci. Let me pull this out. And this is the highest point here. And this. So here it is before XRP continues its upward journey. You can expect, because what we see happening here is this is looking like the formation of a potential double top, which is indicative of a reversal. So in terms of where we can expect price to reverse to before it continues its upward journey, it can reverse back to this 54 cents level. And if it goes deep into the golden zone, can go as low as 52 cents. What I would advise is to allow this retracement that we see here, allow this retracement to take place, allow price to go down the mountain on market cipher. And if you really want to make money in the short term, wait for a price to break below the plot line for a sell and ride the sell down to the base of the mountain. And once you get to the base of the mountain, then you can make up your mind for the long day. And you can, once it gets to this 0.5 level, I feel personally it's going to come back to the 0.5 level. And then the next take profit level will be at about 78 cents. 78 cents is where I would have my first take profit. In terms of looking at this, see, this is why you want to line up your charts side by side so that you can get a clear appreciation of the move that you are witnessing. Now, here it is on the okay, here it is with XRP. What we see on the weekly, we've had a push for the last 3 weeks, but here it is when we look at what is happening, it has met some resistance based on this order block that is acting as a reversal point. And when we look now at the daily chart, that same run up over the last 3 weeks, when we look at that run up on the daily, we see that there was a rejection, retracement. Now price came back up to retest that zone, and we are observing that there's going to be a rejection that has already started forming that we can see clearly on the 4-hour chart. We also can see that based on the RSI of the daily chart in the middle, price is overbought. And when price is overbought on the daily, you can look to see a correction in the market. In this instances, price will try to go back to a place of equilibrium. And what we see also is a red dot on the market cipher, indicating that a price to the push to the downside is taking place, in spite of what you are seeing with the weekly 3 weeks push with these two big candles. When we go and we look at the market structure even more closely, when we go to the lower time frame of the 4-hour, we also note that after the overbought scenario, as is noted here, with the high marking the price high of 63 cents, we note that there was a rejection to the downside. This red area here on the 4-hour is this one red candle on the daily. Okay, then what we see is price went back up to retest that zone, to try and retest that 63 cents. And what we see is price has had another rejection. And based on what we see with the RSI on the 4-hour, we can expect more downward pressure. We have one we have a red 4-hour candle has already formed. Now, in terms of determining if you were to consider a potential sell, you would want for price to break below the plot line. But because the overall trend, which is determined by the higher time frame, is saying that price is going up, this area of resistance formed by the order block that we see being respected right now is going to be a mere retracement, a minor retracement. Once that minor retracement takes place, price is going to continue to go to the upside. In terms of where you can expect price to go, the level you're looking at 90 cents. So if price is presently at 60 cents on the weekly chart, over the course of the next few weeks, you can expect the price is going to try and get to 90 cents. In terms of what that looks like, it's a very long run. But here it is. This in itself is a swing trade. But for those of you who are anticipating a buy, I would advise you to use the daily chart as your primary driver to show you when to get into this trade. I would also advise you to allow this double top to form and allow the retracement to take place as to what we see taking place on the 4-hour, as indicated by the RSI and the red dot and the red candle on the 4-hour. It is telling us that a downward position is forming, but because the overall trend on the higher time frame of the weekly is for the upward trajectory. And as you can see, the pressure to the upside, if you look at the candles that came before, here it is, we see over here with this buy, we see the very strong green candle that is telling us a lot of buying pressure, even though there was a strong red candle. We see here strong green candles, a very strong green candle here. You see, now there was a retracement, and now you're seeing another push to the upside. But what I'm saying, as a trader, you have to respect the lower time frames as well. You're using the trend of the higher time frame of the weekly, but you have to respect the price action that is taking place on the lower time frames. Yes, overall on the weekly, XRP is going up without a shadow of a doubt. But here it is on the daily, a retracement has begun to be formed. On the daily chart, we have hit the premium zone, which is also a supply zone, and we are seeing a rejection taking place on the daily and on the 4-hour. Now, right now on the 4-hour, we see the block is red. On the daily, it is still saying the block is green, but we already see a red dot has formed, which is showing us the downward pressure has begun. So basically, for those of you who are looking to trade XRP, I would advise you to allow the retracement on the 4-hour to take place. And once this retracement, you can, after the retracement has taken place on the 4-hour, then you can enter a potential buy. But for the strongest buys, I would advise you to allow price action to come to equilibrium on the daily and the 4-hour. I hope that was a reasonable analysis for you, Master Wallace. Any questions in regards to Sam?
Doc, sorry. Do you mind giving us your perspective on the two things for me? Be helpful. The NAS
Pardon me,
itself.
I didn't hear you. What's the asset?
Sorry about that, Doc. I was asking, do you mind giving your perspective on the broader markets, particularly the NAS, and
Okay.
also if you could give me your view on my all-time favorite EGLD. And last piece, what do you think is going to happen when you think this real bull run will come? Early 2025 or whatever.
Okay.
I
Let's
really,
answer. Let's start with the last one. When is the real bull run gonna come? Let's start with looking at what the charts is telling us, right? Boy, this is gonna be bloody this week for
yeah.
Bitcoin. It's gonna be real bloody. Boy, wow. Hey man, look at this. This can be bloody. Wow. Uh, for those of you holding positions in Bitcoin, I hope you are preparing for a big short because a big short is coming. Ain't no getting around it. Let's look at the monthly chart for Bitcoin. Okay. When is the bull run coming? Well, it's gonna be a good minute according to this. Wow. Wow, 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 wow. Bad news.
Oh, bull run.
So, wow. Based on what we see going on here, we're looking at a 45,000 price tag. Let me see something. Let me go into the weekly. Oh man, yeah. We're looking at a 45 because here it is. What has happened? She's already hit the 0.6, was rejected from the 0.6, gone up, and now she's being rejected from that order block. And RSI is already pointing down, and she is coming from a double top position. And this is on the weekly. And if you see a double top on the weekly, it is
Yeah,
a very strong, it's going to be a very strong push to the downside. Oh man, this is not good. So now here it is. Here it is. If we are fortunate, we will see a reversal at the $45,000 mark. And if price goes to its worst case scenario and has to take out the demand zone, we are looking at a price tag of about 26,000.
what does it?
That's how painful it's looking. And keep in mind, if this here is just the first step
Yeah.
off of the downward motion, the average steps that take place are 3 steps. So here it is. We are looking at a potential next step to here. And if we are lucky, it will go up, but 9 times out of 10, it's gonna be a retracement to here, and then down here, and then a potential bull run. That see, another trading associate asked me. He kept saying, I projected for this 24,000, right? And he's saying, I might have missed out on that call. But as it is looking right now, based on what is taking place, in the charts, and the fact that that order block has been formed, see, it would have been different if this order block had not formed on the higher time frame.
Yeah.
Then there would have still been hope. There still would have been hope. But what we cannot live in the land of hopium as traders. And this is sad, in terms of, what persons would have wanted. Even when we look at the Heikanashi, see, this is why you can't trust the Heikanashi. The Heikanashi has shown you the double top, but it hasn't shown you the order block. And this is one of the reasons why I still prefer using the traditional candles as well. The traditional candles will give you more information. Give me okay, yes, the other part of your question was the other markets. But in terms of what is happening with Bitcoin, ladies and gentlemen, um, in terms of next step, in terms of next price projection, you can look at about a $48,000 level in terms of where price is gonna go. Based on this here, tomorrow when I get up, I'm gonna be looking at my charts to add a big short sell. And, once it breaks the zone. Now, let me take a look at the other markets. US 100, when we look at the US 100, let's look at it, see what's happening. Boy, it's a bloody, what are we looking at? This is a bloody world. Well, in terms of the criteria, here it is on the weekly chart. When we look at the US 100, prices presently coming from the top quarter, and it is pushing to the downside. On the daily, it has already broken below the plot line. We have a strong sell in effect that is confirmed also by the, oh wow. Any particular one,
For me,
something?
it was really the Nas was trying to get a sense of direction because I know the past week or 2 weeks she actually threw a bearish signal. But one thing with
Yeah,
Nas, you got to be careful.
bearish. Dollar. And see, this right here is proof that Bitcoin is going to be going down, because here is the dollar is going up. S&P, let's do S&P. S&P is going through some retracements, even though in the 4 hour she's trending up, but she has to go down. She has to go. It's taking my chart so long. See the DJ, Dow Jones, Industrial. Everything is in a skittish zone. The Dow Jones it wants to push higher, but this retracement is real. Let me see what the everything is over. Oh man, it's gonna be an interesting week in the market. The VIX is even. Oh man, VIX talking. Okay, yeah, this is gonna be a red week in terms of stocks. Let's look at some stocks.
Is there a specific way to trade the VIX? How do you treat? You just leave it alone.
How do you mean if there's a particular way to trade it?
I mean, you know, every asset here has a unique, yeah, little proclivities. I mean, I
What
guess.
when I look at assets like the VIX, I only use them primarily to give me a pulse of what is happening in the market.
Okay,
Here it
not a,
is, a lot of older traders will tell you that, oh, crypto is volatile. But when you look at the VIX on the weekly, doesn't it scream volatility to you? There's no, see, personally, I would not trade the VIX.
okay.
I use this to give me an idea of what the overall market sentiment is. So here it is, just in looking at this on the weekly, I'm seeing a very a very bearish sentiment. If I switch to the monthly, I'm coming out of a position where I could consider that the market is going to go into an upturn for the next month. But for right now, she is consolidating sideways on the monthly. Now we're about to see a breakout on the VIX. The thing with trading other assets like the NASDAQ, like the dollar, like US 30, the key is in using the monthly time frame. Use the monthly time frame because what the reason why you want to do that is because a lot of them, they are slaves to past price action. And when I say slaves to past price action, literally they will respect levels that were established in some cases as far back as in the 80s and the 70s, especially if you're dealing with stocks. When you're dealing with futures like silver and gold, you want to use the monthly time frame because, okay, here it is. We're analyzing, this is gold we're looking at right now. Most persons, when they enter these particular assets, they try to take short positions, not realizing that the persons who are trading the silver, the gold, the platinum, the plutonium, these are institutional investors that are mainly focusing on these things. And what they are looking at is they are looking at long-term positions. They are looking at positioning themselves whereby they can comfortably how should I say it? They can comfortably make money knowing that the markets are somewhat slave to their whim and their fancy. You do not want to test the validity of the higher time frames in terms of what they're gonna do. The reason why I say that is because the higher time frames are going to play out. They are going to play out. And you as a trader, you want to use the fact of the higher time frames coming off of key levels, whether those key levels are the premium or discount zones, whether that is coming off of a order block or supply or demand zones. You want to acknowledge those key levels every single time because those key levels are going to have impact on price action. Those key levels are going to ensure that you are gonna either win, lose, or draw. Here it is on the thing, and we're looking now at a 12-month chart. And it might not seem like much, but if you were to simply use the direction of the higher time frames, you would be right 9 times out of 10 in terms of your trade. The high time frame direction will always have to be brought into alignment with the lower time frames. The lower time frames is for persons who I call them more scary more risk averse, they're thinking that they're avoiding risk, not realizing that those who created the stock market, wanted to create an environment where they can be in positions for very long periods of time, and that is key. What does oil say? Right now, let me see what Forex. Right now, a lot of the markets are very choppy, and we got some stuff going on in the markets. Now, here it is, right? When you examine XRP, this is a quick shoot back from the monthly time frame. You just got a buy indicator on the monthly time frame. But here it is, you're still in a consolidation mode. This is what I'm meaning when I say XRP is in consolidation. Now, when she breaks above this supply zone, then that would be a good time to be entering into XRP. But here it is, XRP still has some downward testing to do based on market cipher. There's a strong possibility that price action, though you got this green, big green candle for the month of XRP, according to what is happening with RSI and market cipher, this was just merely a retesting of that plot line, and the chances are that price is going to have to go down before it goes up, like I said earlier. But Master Carvel, when you're trading the stock market and you're trading the Forex market, I would advise you to implement the monthly and the weekly charts as your primary charts. You want to see as much data as possible, and even though you are day trading or swing trading, I should say, even though you are swing trading, you still want to capitalize on the biggest moves. Now, here it is, ladies and gentlemen. This is not to say that you cannot see a big move coming with XRP in this instance. Me personally, what I would do is I would box in my consolidation zone, because really and truly, this is the buildup. And when I say this is the buildup to determine where price action is going to go. Now, for those of you who are anticipating this breakout, keep in mind, this is the monthly chart that I'm looking at, and this is the monthly chart that I put that box around. When we go to the weekly chart, you can see, like I was saying verbally, we are in a consolidation. Now, what is going to happen as a trader? The reason why I say it is not safe for you to enter a trade with XRP is because XRP is in a consolidation mode in this box, and you want to ensure that it has shown clear direction as to where price is going to go before you enter your position. So once you've placed this nice good box around this XRP consolidation that is happening on the weekly, what you want to do is you want to see a break and retest of your box. You want to see a break and retest of your box, because you do not want to fall for the fake out of price action. So I hope this helped a little bit, Master Wallace, with your analysis on XRP, and Master Carvel, for your analysis. No matter what asset you're going to be trading, use the higher time frames on the monthly. Now, for those of you who are trading the euro for those of you who are trading the euro, one of the reasons why a lot of persons have chosen to trade the euro pairs is because the euro, in terms of its age, is rather young. If my memory serves me correct, the euro just came on stream about 1999, thereabouts. I don't know. Wow. But so here it is. You'll see that a lot of the charts with the pairs don't have a lot of data, and it is based on that particular fact. So if you want to trade Forex in particular, for those of you who want to trade Forex, you'll notice that the euro pairs, in terms of their data, you don't have to do a whole lot to see their data history. And this is where finding those key levels that I spoke about. This pair that I'm looking at right now, this is euro versus US dollar. And in terms of what is taking place, this is the monthly chart that we are looking at right now. And what you will notice, ladies and gentlemen, if you were to trade on the using the higher time frames as your steering wheel as to where price is going, what you will notice is you are able to get very clear pictures of price action. And when you combine that broader picture of price action with the requisite indicators of the RSI and the market cipher, you are able to get onto the moving train's direction rather easily. I hope that answered your question, Master Cargo.
Yes, sir, it did. It did. It definitely did.
Master, okay, excellent.
BDP is
Master,
looking. Sorry, go ahead.
pardon me?
I was saying, I noticed you said that the TA for BTC is one thing, right? But how does that correlate to the what do you call it, when BTC gets weak and all coins get better in general?
Here it is. You got to keep in mind when money is moving, it normally moves from Bitcoin. Sorry, let me go again. When you see Bitcoin makes a major, when you see Bitcoin makes a major move of a bullish nature, the altcoins will follow that move and will amplify that move, even if it is not altcoin season. Let me give you a working example as to what I'm talking about. For instance, when you see Bitcoin make, say, a 10% move, for instance, the average altcoin will make anywhere between a 10. Sorry, if Bitcoin makes a 10% move, the average altcoin will make a 20 to 30% move. So now, based on that data, the same thing is the reverse. If Bitcoin takes a hit, you will find that altcoins will take a harder hit. So with this in mind, one of the strategies that you can implement as a trader, when you see Bitcoin is trending to the upside, this would be a good time to weed out the altcoins that are matching Bitcoin and surpassing Bitcoin and trading those coins, because what you're going to find is the amount of liquidity and the amount of room for increase in market cap is amplified in the altcoins. So here it is. This is one of the reasons I'm glad that I did that breakdown on the XRP, because what is going to happen is what you're going to see is when this scenario with Bitcoin losing steam and moving to the downside, in spite of what people want to see happen, when you see the masses of people come to grips with the fact that the price of Bitcoin is going to fall, it is going to be already maybe 40 to 50% in decline from when they should have entered their sell. One of the ways, like if you guys follow my my Facebook page or the Day Trade Institute Facebook group page, you will notice that when I make calls, it is always of a swing trade nature because I base my calls based on the higher time frames. Because yeah, the hour chart on the hour, you might see the whole market is green. But when you look at the overall happening in the market, there's a there's a bearish overall market sentiment. And so based on market sentiment, you have to always pay attention to market sentiment. Market sentiment is basically fundamental analysis. And we cannot separate fundamental analysis from technical analysis. Yes, we focus primarily on technical analysis, which is chart reading, but we also have to focus on fundamental analysis in terms of what the outward views and opinions of the market are. Here it is as simple as the breakdown that took place with Microsoft Windows and the travel industry yesterday and the day before in terms of the crash. One may say people outside of the financial markets would not understand the impact of that. But here it is based on just that sentiment happening. You saw a lot of market movements. Persons started to panic. They started to move monies from one asset class to the other, and so on and so forth. Here it is. Most persons are concerned if they are making their money in the digital realm and the digital realm crashes, how are they going to make money? But the reality is this is one of the chances that you as an investor has to take. This is one of the, we don't know when the end of the world is going to take place. We don't know when a world war is going to take place. When those guys were trading the markets in 1928, if you had told them in 1929 there would be a major market crash, some persons would have said yes, they were expecting it based on the markets being overbought. Others would have been saying, calling you a fool because your sentiment would not have added up or would not have been in comparison to what they were making money-wise. The thing about it is, when you see the majority of persons are moving mentally in one vein, if you see the market sentiment is extremely bullish and everybody's hyping the markets and saying that price is expected to go to a particular number, it is at this particular juncture that you as a trader, you as an investor should take a step back and you should pull up your charts. And in spite of what you are hearing on YouTube, in spite of what you're hearing on TikTok, in spite of what you're hearing on Facebook, look at the charts and look at what the charts are telling you. Here it is. When I was telling people that we had met the market high and we're going to have a heavy retracement on the price of Bitcoin, persons literally said that I didn't know what I was talking about, that I don't know what I'm talking about. The prices has to go. But what I know in any market, when you have these type of surges like we had with the price of Bitcoin, and this is the monthly chart we're looking at, And here it is, you can see the consolidation and the rejection quite clearly on the monthly chart. We have a higher high candle, and then we have this big red candle overshadowing, larger than this green bullish candle that took place. Just the mere fact that we had this big red, all encompassing bearish candle that overshadowed the previous green candle let us know that there has been a shift in market sentiment. Let us know that the upward trend that was taking place with the price of Bitcoin is now in another direction. See, we can say, okay, this ain't happening, and so on and so forth, but what are the charts telling us? The charts are telling us that the price of Bitcoin is overbought. This is the monthly chart is telling us it is overbought. The monthly chart has given us a red dot, and the mountain has started to move down. The monthly chart on the RSI has begun to move to the downside. So if the monthly chart is telling us this, we should pay attention to it. And as you move to the lower time frames, you will notice that the lower time frames will give you further confirmation of these facts. I hope that has answered your questions for the night, ladies and gentlemen. Yes, Master Johnson, how are you?
One more question, sir. You went through Torn.
Yes, sir.
I didn't see you go to I wanted to see an entry that you made with Torn on the 15-minute or the 5-minute chart.
I made an entry on Ton on the 4-hour chart.
Oh, you made an entry on the 4-hour chart. Okay.
Yes, sir. Let me pull it back up for you.
No, I just wanted to know where did you make your entry?
Yeah, I used the 4-hour chart. What I did, let me put this back. See, got a big red hour on Ton on the monthly chart at an overbought. I couldn't have nothing better sell for Ton. Right. But like I said, Master Johnson, I would use the 4-hour chart as my entry. And like I said, I would, based on the structure that I was looking at, I knew that this was a retracement, and I waited for the break of the plot line. And I also had a sell alert on TradingView. And once I got my alert and my confluence confirmation, I entered my trade. Here it is. I got my red dot, and then I got the price. Let me open up my 4-hour chart so you can see it more clearly.
So how long would you be in that trade if you entered on the 4-hour chart?
I'm gonna be in this trade for the next week and a half.
Okay.
Give or take. This is a swing trade. So here it is. I entered this position once the candle broke my plot line, and a whole candle that formed below the plot line. I entered my sell position, and that is the position that I am presently in. And I expect that even by next Monday's class, I may even still be in that position, but I would be extremely deep in profit. And based on what I am seeing with the charts from the higher time frames, I'm going to make a good play with this. So those of you who may be wondering what trade you may want to make, now, if this is a position that you want to enter, you now gotta wait for a retracement to take place. And once the retracement takes place, you get in on the next sell. So you can set your sell alert for the 4-hour chart. You can set your sell alert for the 4-hour chart. And once you get the alert and everything lines up, you can enter your position. And that's it. Does that answer your question, Master Johnson?
Yes, and then if you if you want to play a shorter period of time, you look at the hour and the 15-minute then.
Exactly. If you wanted an even tighter entry, you can go to the hour or the 2 hour. But truly, if you're swing trading, I wouldn't advise going lower than the 2 hour. The 2 hour, from an entry standpoint, is a better time frame than the hour. The reason why is because the hour time frame has a tendency to give you more entry indicators and alerts, and you want clean entries, clean alerts. So here it is. You would base everything based on the stair stepping that you're witnessing. So here it is. We have this first step. We have the first, if you're looking at the daily in the middle, we have step one. Now we're in the middle of step two. We're actually coming to the end, we're in the middle, sorry, of step two. And what you're going to find is, in terms of your entry, you want the second step to complete first and retrace. And once the retracement has completed, then you can get in on the sell when the red candles start again on the daily. So in terms of the daily, if you don't mind a drawdown, because that's what's going to take place here, you're going to see a little drawdown, a retracement, then price is going to push through on the 4 hour. But I would wait for the retracement first on the 4 hour, and once the retracement finishes, I would jump in to continue the sell down. And like I said, at a minimum with this trade, you're looking at a 1 to 3 risk reward ratio. It may take you a little longer in terms of a week or so, but you would have made your 10 to 20% for the week. And 10 to 20% for the week is considered a good week. Answers, I covered everything.
Yes, but you said a day pull down on the day chart. But that means you have to have allocated certain amount of funds for that pull down.
Yeah, you have to ensure, like with me, for instance, I ensure that on the daily chart, because that's my real monitoring chart, I ensure that my stop loss is anywhere between 4 to 5%. And as you can see here, my stop position is at 3.98, right above the plot line. But in this particular instance, I don't expect any retracement back to that level. I expect that price is going to continue to move down for a bit before the end. I'm expecting at least to the 682 level thereabouts before the retracement starts. And if I'm fortunate, it will push all the way down to equilibrium before the retracement starts. And if I'm being lazy and I don't want to wait for the full completion of the trade, I would get out at the end of this thrust downward. But as it presently stands, I'm gonna sit it out until my first take profit, which is this demand zone here, as represented by the blue area, which is at $6.20 thereabouts. That is $6.10. I will take my first take profit there, $6.10, and play it by ear from there. Ladies and gentlemen, that is
Thank you
the
very
end
much.
of tonight's class. I hope I answered everybody's questions. I'll be watching this trade for the rest of the week, and I'll let you guys know what my results are next Monday. Enjoy the rest of your week. This is Doc saying thank you very much for spending your evening with me. I hope I was able to impart some knowledge and wisdom. So I just want to wish you a good night.
Oh, Doc, one more thing.
Yes, sir.
Could you pass over the last few classes onto the day trading platform? I didn't
I
see them.
have the last two classes I have to upload. I just had my minor business added them, so
Oh, okay.
I'll upload them. I'll upload the first one tomorrow.
Alrighty, thank you.
Okay, good stuff.
Enjoy.
Well,
Have a good night.
folks, have a good night.